Hi, it's Marco Alfaro from TaxCare. Today, I want to talk to you about the new tax game for 2018. As you know, the Congress have passed the biggest tax changes in the history. With that, some amazing benefits and deductions for self-employed and small businesses. But one thing that I haven't seen, even though there's a lot of noises out there in the media, is how these changes really impact small businesses as well as self-employed. So a lot of what we hear usually has to do with big businesses and individual impact in regards to the tax law. Now, if you're self-employed, you want to pay attention because you want to understand the impact that this is going to have in your business and your pocket. Many of these changes or benefits, although they're amazing, they don't automatically happen. You have to do something about it. In fact, if you don't take action now, you might be at a risk of losing thousands of dollars, not only this year, but for the next 5 years to come. So what we need to do is understand something very simple. What is the game in taxes? So the biggest thing is that I want to make sure that we emphasize or look as these changes as a board game. So it is important that we understand what the game is, who the players are, what the rules are, so we can save those thousands of dollars or lose them by not knowing and understanding what those rules and changes are. So one thing that we need to first understand is who the players are. As we already know, the IRS is one of them. You are the second player, and also your business as a self-employed or a small business owner. On top of that, there is one more, which is the Congress. Congress is the one responsible for passing all of these laws that actually dictates the relationship and how things work and flow between you, your business, and the IRS. How the money is generated, how the money is taxed, and the structures in which you can and can operate. So enough of that. What I want you to do is, for now, I want you to start thinking structurally in regards to your business. So you will be making money through your business. Your business is going to pay you. Once you get paid from your business, then you pay some of that money to the IRS. This is what we call pass-through entities. You may be already one of those pass-through entities if you're an LLC, sole proprietor, an S corporation, or if you're in a partnership. And these are important to understand because this is the beginning of understanding how you're going to be taxed or how the money flows. Now, I want to dispel something else because a lot of the government has given huge discounts on businesses. Most of them, what they're referring to are corporations, big corporations like IBM, Apple. Some of these big corporations usually trade on the stock market. But what happens is, as a corporation, they make money and then they pay directly to the IRS. And then after they pay the money to the IRS, money that get paid to their employees, or if you then you're gonna pay to the IRS first from the company, and then whatever money you pay to yourself, now you're gonna end up paying again from that money that was already taxed to the IRS. This is what we call double taxation. So I'm not going to spend much time here because this is the structure that we don't want to use, and many of you may not even be using this. So this is probably not as applicable, but I wanted to make sure that you understand it. So here's basically the big noise out there that the government gave a huge discount from 35% maximum tax that the corporations used to pay to a 21% flat. But remember, it only impacts the corporation, and then there's the double taxation as well. So moving to the second part, which is the most important one, because here's where you're going to save a lot of your money and make even more money because you understand the game of how taxes work. So now, as we did before, we make money through the company, you get paid, but guess what? We need to do a calculation. I'm gonna make it very simplistic, okay? So you make money as a business, and whatever money you have there, you have to add your personal income as well, because that means that you might just work for somebody else, or you and your spouse do your taxes together and you have personal income tax that you want to report as well. After all the adjustments are done at the top of your tax forms, you get to the point that is considered the adjusted gross income, or more, or also known as the AGI. Then you have here in this section, you come to the part for your personal deductions. Many of you have heard the standard deduction have increased from $6,350 to $12,000 per individual. So you and your wife can now have $24,000 standard deduction, which is fantastic. Then you also have your itemized deduction, whichever works best for you. And it's here where you get to the point of your taxable income. And now, as many of you know, also tax rates dropped, allowing you to pay less taxes because of it. But before we go farther, then we need to come here to understand one thing, and one thing only. Pass-through entities, the government have allowed a 20% deduction of your income, business income, to be deducted, something that we did not have before. Of course, there's some regulations, some restrictions that we can go into it later on, but at a simplistic level, for you to understand, pass-through entities have the ability to deduct 20% of the net income. Okay, so you bring that in there and you now have a lot more deductions or savings.